I want to apologize. It's been a few weeks at least since my last video. Quite frankly, I've just been pretty busy with building a lot of content, trading full time, and also working with a number of different businesses and ventures that I'm involved with. So please accept my apology for that. I will try today and give you an update on where I see the 60-day cycle, the shorter term, but of course focus more on the long term that I said we'll dedicate this channel for. Look at the kind of the 4-year cycle outlook, where I see potentially Bitcoin moving over the coming year, or at least this year, 2019, and just give you some more strategies on how to trade and invest in this type of environment. And then lastly, as a disclaimer again, information I provide here on this video is not for you to go out and buy or sell immediately, especially, and this means especially, the short-term analysis that I provide, especially on the 60-day cycle. I can flip bullish and bearish in a heartbeat. If a daily chart, even a 4-hour chart, tells me otherwise, my position will change. So by the time you watch this video, the day after or 3 days after that, I may already be in a different position. So this is why it's impossible to use YouTube and a weekly or bi-weekly type forum and videos to give you an idea of what I'm doing from a trading perspective. Now, from a HODL or holding or investing perspective, that's not really going to change with the fluctuations from day to day, and it shouldn't change day to day. If you are investing or have a long-term horizon, the day-to-day movements, no matter how wild the swings are, should not impact and will not impact how you view your long-term investing strategy. So please be aware of that. Do not follow me here only on YouTube from a trading standpoint, please. Okay, so let's get into this. Let's talk short term for a little bit, and then we'll go to the long term view. So right now, day 43 of a 60-day cycle. 43 days is well past the midpoint of a 60-day cycle, meaning that we are now in a defensive mindset. Anytime a cycle, especially in a bear market or in a sideways chopping market like we have right now, we need to be defensive whenever the cycle goes beyond day 30. And why is that? Well, because we've been seeing a lot of left translated cycles, meaning the top has occurred on or before the midpoint of the cycle. So fewer days going up, more days going down. That has been the pattern for 1 year and 3 months. We have day 19, day 27, day 30, for example, 34, 27. All these here were midpoints, or I should say these occurred, the tops occurred before the midpoint, making these all left translated. You will see a larger or more lengthy decline in time for each of these cycles. So that pattern of cycles has not broken just yet. We are not in a new bull market, and we're not even 100% sure if the 4-year cycle low is ahead of us or behind us. So for that reason, we need to stick with the previous trend and the previous cycle knowledge that we have at hand. And currently what I'm seeing is that we have a day 18 high that has yet to be exceeded in this cycle. Now we do have a nice little uptrend developing here, but it's really coming on a lack of any significant volume, and I'm not seeing any real significant momentum or urgency to buy this market. And by day 43, I really would have expected it to have broken out significantly by this point if we were in a new type of trend or uptrend. So what does that mean exactly? It means that I think we still can perhaps see a move higher over the next few days to break the day 18 high and essentially negate or remove the top there, because the new cycle high would be in the future. And also to break above the day 9 high that we have back in December from the past cycle. But I think if we do get up into this area over the next few days, that this will act more as a bull trap in the short term than it will anything else, because we have a cycle low due in some point in April, and it's coming up within the next sort of two to 4 weeks, in fact. So it's coming up pretty quickly. So I think if we do get this move up, I think we're going to come back down and we're going to find a low at some point in this area, hopefully in this area. Remember, cycles are not necessarily about price, they're more about time. So this is the window where we see perhaps the next cycle low. The good news is that if we do pop above and make new highs for 2019, it makes the possibility that we'll see a higher low in the cycle low because we have a higher high. So what we'll be doing is creating kind of this new stepping up trend. So here's a high, higher low, higher high, another higher high here, and a higher low. I'm sorry, this would be negated. So we would have high here, higher low, higher high. So this high here would be higher than this one. And then hopefully this low here in April would be higher than these two lows. So then that creates a new trend of higher highs and higher lows, which then brings into focus this December low as being the 4-year cycle low that I've talked about in previous videos. So that's kind of like the bullish scenario that's out there. Let's just draw in for the time being a window. Let's just say from April the 2nd, the earliest part, to around April 23rd. We're going to draw in this big box. This is the timing window for the next cycle low. So I think we certainly find a low below kind of 3,700. I don't see how a low would not sort of form below that range. The question then is, how low can it go? And that depends on the 4-year cycle as well. But let's just draw it down here, just for argument's sake, just so we have a mental and a visual on what the potential is coming up. So how do we get into the lower area of this timing box? So what that might look like is, let's take a different color here. This is kind of your really bearish scenario, where essentially we're almost right at the top of the cycle, or we may even just get a little more out of this. Okay, probably don't exceed the day 18 high, and then that keeps it left translated 18 days to the top, and then, you know, kind of a double top and then a move lower. So in that case, then we have a lot more time in the cycle, or enough time at least left in the cycle to get down deeper into the lows. And then the question becomes, does the February cycle low become kind of a support range and a double bottom, or does the December low become a double bottom and sort of a retest of a 4-year cycle low and then a move higher? Okay, that is probably my favored viewpoint right now. That preserves the idea that this is the 4-year cycle low, this is a retest, and now we've created enough kind of separation between the prior 4-year cycle low and where, or the prior cycle lows here at 3,100, and where we are now at 40, 50, let's just say. If we get up to 4,100, down to this December cycle low point is another $1,000 drop, or around about 20%. That's significant enough, if it happens over a short period of time, to create enough kind of fear and panic and capitulation on high volume to kind of induce an end to this bear market or this sort of crypto winter. Now, it's never gonna skyrocket, you know, until probably next year, but enough of a decline here for this to create a real sort of V slingshot type of action up into the 4,000 range and up towards maybe even 5,000 by kind of the early summer months. Okay, and lastly, let's look at the ultimate bearish scenario here, which, to be honest with you, I think has enough credibility for me to actually be pointing this out, and that is where we get kind of a flush, a real heavy volume, really large significant capitulation and sell-off that could be marked as the 4-year cycle low at this point. So it's similar to the green bar, it's just that it's steeper, right? We get down to test the December lows quicker, and then we kind of just get deeper and deeper into that point, and then we come out. And kind of same kind of end result as the green scenario, where you have this V-shaped recovery. But I find that most big bear markets either end in this wide, very wide facing double bottom type pattern, or they end in a V. If it ends in the green with a double bottom, it's probably going to take a lot longer to sort of come out of that over the summer months. Whereas if we get this really big sell-off, we may even slingshot rapidly up towards 5,000 and beyond. But this here is a scenario that I'm putting enough weight behind and would not be surprised to see, to be honest with you. And in some ways, I kind of want to see this. I feel that this could bring an end to this bear market once and for all by doing that, and get us up into kind of the $5,000-$6,000 range, and testing, if I zoom out, testing that $6,000 area much sooner in the early portion of a 4-year cycle, as opposed to maybe later in the year as well. Now, I also often get asked, what if you're wrong? What if it just goes sharply higher from here and doesn't necessarily look back? And my answer to those types of questions is always, well, I will respond. I will adapt and change. The one good thing about cycles that a lot of people don't seem to get is that it's not supposed to be a definitive and absolute type of study, like something like Elliott wave, which may be more rigid in how certain waves are counted and measured. In cycles, there really isn't such a concept. Cycles are just a reflection and a look at the price action over time. And we don't necessarily always get this perfect little oscillating ebb and flow action in cycles. Sometimes you just get a sort of freak move where, something like this would just happen. And then the cycle low happens all the way up here. And then we may get tests like this. That's also possible. The reason why I don't mention it is because, one, there's a limit to how many sort of alternative scenarios that you can have in trading. It becomes too noisy at some point. Two, you have to have some conviction in what you see ahead of you so you can trade with conviction. And it's only when you don't have conviction that you don't want to be necessarily trading, right? So right now, I do have a decent amount of conviction that we're going to be heading lower to some extent into a cycle low in April. So my trading strategy in the short term is going to reflect that. But I'm not naive to think that it has to be that way, because I'm not sort of pig-headed in that sense, because it does impact your trading if you're not flexible enough. So I have the conviction that we will be going lower, but I'm willing to accept anything the market gives me. And if the market and price action deviates, or moves against really what I think is going to happen, then that's where my trading and my trade size and my risk management comes into play, right? That's where I'm getting out rapidly. I'm acknowledging to myself that my analysis is incorrect, and I am adapting. I may even at that point say, hey, this is actually not bearish, it's bullish, right? It's bullish in the short term. So is there a narrative or a scenario that shows me a bullish path forward that I can trade? So I want to adapt quickly, and that goes to my point in the beginning of this video, that if I'm going to provide a video once a week or once every 2 weeks, it's not frequent enough for you to get a sense for what I'm doing in the short term, right? I get people respond to my video 2 weeks later and say, hey, wrecked, you got wrecked. Well, no, I didn't get wrecked. I probably got stopped out for a very small loss, or may have, or most likely, moved up my stops to a break-even point quickly, and then it came back and took out my stop. Something like that is more likely what happened. But for somebody following who doesn't get that extra information that I trade, it's not going to be helpful, and yes, they may get wrecked. So just be aware of that as well. All right, so let's flip the lens to the holders or hodlers and investors on this channel, which really is the main motivation of this channel. And this is where it's not sexy, guys. This is where it's not supposed to be sexy as well. So I really hate using that word, but my point is, we're at the depths of a bear market. We may or may not have the 4-year cycle low in December behind us. If it's not behind us, then I think it's coming right here in April. And I've drawn in this box on the weekly chart here to kind of tell you that, we probably will be somewhere in the 3,800 range, and as far down as, honestly, as the $2,200 range. That is the potential coming up here in the April 60-day cycle low that's due. So the question then is, where does that cycle low form? Okay, and does that bring in a new 4-year cycle low? Now, for me, it doesn't matter a whole lot. I'm not too concerned with nailing the absolute bottom in real time. As this drop was occurring, I thought there's a good chance this is a 4-year cycle low. But also, in my video regarding the 4-year cycle that's on this channel here, you'll notice that I have drawn in kind of another drop in February for this cycle low that was a potential. This cycle, in the 60-day cycle, didn't do much at all. It ended pretty short on 53 days and didn't form new price lows. But the fact that we have not yet seen a new high in this 60-day cycle here leads me to believe there's a potential and opportunity now for this to move one more time lower and really shake out the last sort of remaining holders, or the people that are very kind of frustrated with the time that's taken to get back into kind of a bull market trend from the December 2017 high. So people have, especially people who have not gone through bull and bear markets of this nature before, they tend to have too much sort of recency bias and expect things to return quickly back to a bull market. But the reality is bear markets need to and often become just as extreme on the downside as the bull market was on the upside. So as euphoric and as crazy and as leveraged and as speculative as the bull market at the end becomes, the bear market on the other end becomes kind of this hopeless sideways churning fake out, shake out type of action that just keeps going on and on and on. I've talked about this long crypto winter, how people should expect, even though we may expect or receive a actual price low, they should not expect too much in terms of upside price action for a long period of time. Most of 2019 may also be and should probably be conducted in kind of this lower area as well. And that, to people who overexposed or still sitting on underwater positions that they bought at higher prices, at some point it begins to take a toll on their psychic and their psychology, where they are very weak holders of coin and of assets. And when you do see another capitulation deep into a bear market, perhaps, then they are more likely to panic, more likely to essentially just give up, even though today, as it stands, they may not be saying to themselves they're going to give up. But, you know, another $1,000 or $1,500 drop in price over a very short and rapid period of time essentially changes how somebody sees their position and what they have at risk, and it will often make sort of rash decisions that they weren't prepared to make or thought they would make at this time in the bear market. Okay, so what's the takeaway here? The takeaway is simply that for an investor, right, we're looking to accumulate and to have a full position at this point because we're looking at a 4-year cycle low in December or one coming up in April. We're not concerned with timing a potential decline in April. It's a difficult game and it's a difficult process to be profitable with. We should be very happy with accumulating Bitcoin in the sort of $3,000 range. I think when we look back at this in years to come, saving or trying to capture $300 or $500 or $700 in price when we're looking at potentially a 20x and 30x move from this point is ridiculous. We want to be positioned well and strong. I think what's more important is that we are now psychologically prepared for perhaps one more decline here in April into this cycle low, and how strong are you in preparation and mindset for that. I know many people kind of want to believe the long-term narrative. It sounds, and of course it does sound great when described, but it's a different practice to holding all the way through. It's easy to dream, but it's difficult to hold. So be prepared now for what potentially could be coming up in the next few weeks. And I suggest, even knowing that the cycle low is coming, I suggest that people are still sort of fully accumulated by this point. There's no point in trying again to skim off the bottom here. Have your position and just be prepared mentally for a decline that comes in. Not to sell, not to panic. You've lasted 15 months at this point. You're already down 85% from the highs. Hopefully you're nowhere near down 85% on your position, of course, but this is not the place, this whole area is not the place to be looking for capitulation and being one of those victims, or one of those sort of cases where we look back in the future and say, oh God, you're sold down there. Don't be one of them. Just be prepared for what's coming up. And then in closing, I've talked a lot on the community board here on the YouTube channel about kind of coming up with a HODL strategy for a sort of modern or an intelligent investor's HODL strategy, which kind of incorporates holding for the long term, but not holding no matter what price is there. So being a little more intelligent in accumulating at the right times, like now, and offloading and sort of going back into either fiat or some other type of asset class at the highs of a major cycle. So that I'm still thinking through. I'm looking at maybe building out a forum site where we can discuss this in a forum setting, and then having kind of like a weekly or monthly video that comes along with that, and then also coming up with more of a definitive plan on how much allocation do we have as in relation to our total sort of net worth. What are some of our profit targets? Where are we reducing on the way up? At what point in the cycle, in the 4-year cycle coming up, are we looking to offload certain amounts? So what are our profit targets going up? And then also how we handle the psychology of gains, right? I mean, I don't want to talk about gains now because we're all sort of suffering through a decline. So we're looking at losses on paper at this point, for at least in the short term. But at some point, as this reverses out, we want to be also have a strategy in place for how to handle sitting on gains, because sitting on gains is actually much harder than sitting on losses. People get so biased in certain times that they are and can't, or they panic into a sell, and they don't actually sell. They hold all the way down, and maybe in this case that might be a good thing. But to be honest with you, holding through major gains is also just as difficult to do, especially when your position doubles and then triples and then quadruples in profit. Holding that on and looking and focusing on the grand sort of prize is a very difficult task. So that's one thing I also want to focus on that site that I talked about, and then on the investing HODL strategy that I want to outline for you and start to sort of incorporate with you kind of in real time as well. So it'll hopefully be a 4-year kind of journey where we are constantly talking through the journey where we've been, what our goals are, for example, and working through that together. So that's the little update I have for this week on YouTube. I will consider and work on kind of that longer term strategy, HODL investing plan that I mentioned. Maybe that can come out in a couple of weeks from now. But again, be prepared here. I'm seeing some danger and reasons to be bearish in the short term. Be prepared for that. That's just part of the strategy. Okay, all the best. Thank you for listening. Please like the video, please share the video, please subscribe to this channel. I would appreciate it. And until next time, good luck.